Hello traders, you're welcome to this video. So in this video we are going to be looking at how to identify supply and demand zones. Okay, so basically identifying supply and demand zones is crucial. Okay, it's very crucial. It's a crucial skill for traders. These zones help you understand where prices are likely to reverse or continue trending. It provides you with valuable insights for your trading strategy. So we're just going to be looking at a step-by-step guide on how to recognize these zones visually and use them in your trading. First of all, we need to understand what these zones are. So a supply zone is an area where selling pressure exceeds buying pressure. Basically, that is what it means. It's an area where selling pressure exceeds buying pressure, leading to a potential decrease in price. It typically occurs at previous highs where sellers have stepped in. For example, we can see supply zones here occurs at previous highs where sellers have stepped in. Now, as for demand zones, they are areas where buying pressure exceeds selling pressure, leading to a potential increase in price. It usually occurs at previous lows where buyers have stepped in. We can see demand zones around here. Okay. Now, next thing to do is to analyze historical price action. You have to choose your time frame. We are currently working on the daily time frame. Now, depending on your trading style, you might want to consider other time frames. Okay, if you are a scalper or a day trader or a swing trader, you consider your time frame that's appropriate for you. Okay, then you identify significant swings. You look for swing highs and lows on the chart, just like we identified here. Swing highs, swing lows on the chart. Okay, this point represents where price change direction significantly. Okay, so we can see we have a swing high, swing low here. We have a swing high here. Where price change direction significantly, right? Now, we have to now mark those previous and support resistance levels. We identify horizontal lines on the chart, just like we did here, where price has reversed in the past. These levels can act as supply and demand zones. Okay. Now, the next thing to do is to draw rectangles for zones. Okay, we draw rectangles for zones. So we have to draw a rectangle at the highest point where sellers enter the market, extending down to where the price starts to consolidate before the drop. Okay, so we have a supply zone somewhere around here. As we can see, we have a supply zone around here because this was the highest point price got to, and we had a little bit of a consolidation and we finally had a drop, right? So we have a supply zone around here. And as for demand zone, we do the same thing. We identify the lowest points where buyers entered, extending up to where the price begins to consolidate before a rise. Okay, so we have demand zone around here. Okay, as we can see. Now we can also use candlestick patterns to look for bearish or bullish patterns to confirm the strength of these areas. For example, we can see this bearish candlestick pattern here. We can see this bullish candlestick pattern here. It helps to confirm the zones. And we can also use key indicators. Okay, we can consider using indicators like the volume indicator, which helps to show the volumes around these zones. Higher volume at a supply zone can indicate stronger conviction from traders, validating the zone. Let's see what happened around here. Okay, so you might want to look for rejections or strong momentum in the opposite direction to confirm the zone's validity. If price breaks through a supply or demand zone, it may indicate a potential trend continuation. Okay, so you can look for new supply or demand zones formed after the breakout. So when you have a breakout happen, you can look for new supply or demand zones. Okay, like we have another around here. You can see another around here. See, there was a little bit of a consolidation before price breakout. Just so this is the daily time frame, don't forget. So we had you can see this candlestick pattern here, this doji. You can see this. Okay, now how do you incorporate these zones into your trading strategy? As for your entry points, you can enter trades when the price approaches a demand zone for buy orders, and when price approaches a supply zone for sell orders. Then you look for confirmation signals like candlestick patterns, just like this, just like this. And look for volume spikes. You know, you can look for. You can also use other indicators. You can use moving averages. You can to confirm your signal. You can use relative strength index, that is the RSI, or any other indicator of your choice. Now, as for your stop loss placement, you want to place your stop loss just outside the supply or demand zone to minimize the risk. In case you enter a sell, for example, around here, you can just set your stop loss right above the zone. If you enter a buy around here, you can set your stop loss just right below the zone. Now, as for take profit, you can set your profit targets at previous support or resistance levels or other supply or demand zones, allowing for potential price reversals. So, for example, we also had a resistance support zone here. So for example, if we had entered a sell around here, we could have considered exiting somewhere around here. That would have been a good place to exit. Or we could have considered exiting around this supply zone. I mean this demand zone. But this would have been a good place to exit. And then as for a buy, we would have considered exiting at the next resistance level. There was a resistance here. So we would have, after we entering a buy around here, we would have considered exiting around here or even around here if you just want to catch a shorter move. Okay. Then in terms of risk management, ensure that your risk per trade aligns with your overall trading plan. It's very important. It's important that you risk only the amount you can afford to lose. Never risk more than 1 to 3% of your trading capital on a single trade. It is your choice though, the percentage of your capital you want to risk. But it is usually advisable not to risk more than 1 to 3%, but it's your choice still. So by effectively identifying and visualizing supply and demand zones, you can enhance your trading strategy and make more informed decisions. Remember to practice on demo accounts before applying these techniques in live trading to build your confidence and skills. So as you gain experience, you'll be able to refine your approach and maximize your potential in the markets. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thanks for watching. Happy trading.